Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probability for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical structure level of resistance for this market. In fact, from here, all this previous rejection to the downside was created. Again, here, the market tested its zone and rejected it to the downside. At the moment, the market is testing this exact same level, from which there is definitely the possibility to see potential bearish price action being created away from this zone. So on the monthly, everything seems quite bearish and there is a possibility for more bearish continuation. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, first of all, if we follow the patterns that the market has been creating, we can see that from here we had a massive impulse to the upside and then the creation of this ascending channel. Now, when you have the creation of an ascending channel like this one here, which we can clearly identify by using these two trend lines, this essentially means that the market is creating a deceleration pattern or an exhaustion pattern, because here clearly buyers were in control, creating a massive move to the upside. However, after that, every single time that the market created a higher high, new sellers came into this market pushing the price lower. And now we had the break below the essentially bottom level of this ascending channel, so the bottom trend line, which is exactly what you usually expect in a situation like this, because as I was saying previously, if you have an impulse and then the creation of an ascending channel, this is a deceleration or exhaustion pattern, after which you expect more bearish continuation. We can also notice how we had now a break of structure from a weekly perspective. In fact, if we zoom in, we can see how this level was acting as previous weekly support, which is now turned resistance. From here, this previous rejection to the upside was created. After that, the market broke below that zone. So this previous weekly support is now turned resistance. And as the market is testing previous support and resistance, we could expect bearish price action to be created away from this zone. Dropping down on the daily time frame, what do we see? Well, from a daily perspective, what we can notice is that we have a market which is currently stuck in structure. In fact, we can see how we have a market which is currently bounded in between this low of this channel, in which essentially we have very strong support, which every time that the market is testing it is getting rejected to the upside. And at the same time, we have the top of the channel, which is this resistance level, which every single time that the market tested it, it got rejected to the downside. This essentially creates a range. And this means that at the moment, gold is a range-bound market. Until the market will remain in between these two levels, we could simply expect more horizontal price action for this market. However, things would get interesting if we actually got a break below the low of this channel, because at that point, all that previous support would become resistance. And if we do get the break on the retest of this previous support and resistance, this is where we would have very good probabilities for a potential rejection to the downside, because remember that the monthly and weekly are already quite bearish. So in order for also the daily time frame to be bearish, we would need to see a break below the support. And if we do get the break on the retest, there is good probability inside of this area for institutions to be adding shorts on gold. Why do I say this? Because if we go and see what we have when it comes to the commitment of traders, we can see that institutions have already been adding shorts for quite some time. In fact, if we look at the net positions, we can see how currently they're getting decreased. We went from having the high at 195k net positions all the way down to having only 169k net positions. So clearly, institutions are currently moving to the bearish side for gold, closing a massive amount of longs, going from 266k longs all the way down to 237k longs from an institutional perspective. Now, this could create selling pressure, so bearish pressure for gold. And this means that if we do get the break on the retest, there is the possibility for some more institutional shorting inside of this resistance zone. So we don't know if we will actually get the break below the zone, but if we do get the break on the retest, we will also have the confluence of the Fibonacci levels potentially at 0.32 or 50% retracements inside of this zone, creating even more confluence of resistance. So if we do get the break on the retest, how we could be approaching a potential move lower? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the Trading Station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open an account with them, you can get a full refund credited back into your trading account if essentially you move your trading there. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.